Hi everyone, welcome to the Finance Docket. I am your host Henry Alimeke. Today we kick off our free ICAN Financial Reporting class. We'll cover the syllabus overview, topic weightings, and we'll also get a feel of what to expect from this channel. This channel is perfect for ICAN students or anyone interested in financial reporting. But for the purpose of today, we'll be looking at the ICAN syllabus, the ICAN Financial Reporting syllabus, and also the weightings. So the first one we have here, we have the conceptual and regulatory frameworks of financial reporting. This covers the following: history and development of accounting standards, which are the IFRS and the IASs, objectives and users of financial statements, qualitative characteristics of useful financial information. Then we're also going to look at the conceptual framework, 1989, 2010, and 2018 conceptual frameworks. We also look at the regulatory bodies and standard setting process. Then the B part of the syllabus is accounting standards and policies relating to specific transactions in financial statements. Here, our core focus will be on the various accounting standards. We have different IASs and IFRSs. I just mentioned a few of them here. For example, IAS 16 on property, plant, and equipment. IFRS 15, revenue recognition, leases, inventory, and financial instrument. And there are a whole lot of them that we're going to cover here. Basically, we're going to cover all the accounting standards that are applicable to this level of the exam. Then the C, preparation and presentation of single entity general purpose financial statement. So basically here we'll be looking at IAS 1, the position of IAS 1 with respect to preparation and presentation of a single entity general purpose financial statement. So here we're also going to consider the components of the financial statements, which are highlighted here. According to IAS 1, the components of the financial statement are as follows: a statement of financial position, statement of profit or loss and other comprehensive income, statement of cash flows, statement of changes in equity, and notes to the account. And these contributes 20% to the syllabus. So you can see, so most times IAS 1 questions on this area can come as a question 1, which is 30 marks or 20 marks question. So that's why we are having 20% here. Then the D part here, we are preparing and presenting financial statements. Hi everyone, single groups, finance docket. This also contributes 20% to the syllabus. So here we'll be looking at the parent and subsidiary. Here we know who a parent is and who a subsidiary is. We'll cover associate accounting as well. Topic weighting, statement of financial position. We'll also get a statement of profit or loss to expect. So look at how to calculate from this channel. What does the standard say? Also look at this channel is perfect for controlling the interest students or anyone interested in financial reporting. So what this means is if you control 70% of it, we'll be looking at the ICAN syllabus, 70% of the company's ordinary share. The remaining 30% is regarded as NCI. So the course one we have here, we also look at what it entails, regulatory frameworks of financial reporting, analysis. This covers the following financial statements. So basically, this is about development of accounting standards, ratios, which are the look at ratio analysis. Under ratio analysis, look at the profitability, the users of financial solvency and efficiency ratios, qualitative. And here we're also going to consider trend analysis. And remember, we're also going to look at interpretation is also very key, and limitations of the financial statement ratios as the case may be. 18 conceptual frameworks. So the other part, look at the regulatory bodies. This is relatively a new process topic. And the B part of the syllabus is accounting standards, and which also policies relating to specific transactions. And look at the ESG reporting. Majorly here, our core focus will be on the various. Look at the IFRS 1. We have different IASs and IFRS. A new topic. I just mentioned a few of them here. For example, IAS 16 on property, plant, and equipment. Is ethics, 15, current and technological developments in leases, inventory, and financial instrument. Ethics, and current, a lot of them developments in financial. Basically, we're going to cover all the accounting standards that are applicable to this level. So here we're looking at ethical issues in financial reporting, professional judgment, and ethical dilemmas. Preparation and presentation of part of technology on financial reporting like AI, data analytics, and automation. So basically, here we're looking at development in financial position of IS1. So with respect to cumulatively preparation and position that gives us 100% general purpose financial statement. So here we're also going to consider the components of financial statements, which are highlighted here. Something about according to IS1 accounting standards. Financial statement as follows. I think this might be relatively statement of financial position. Some of you statement of profit or loss, another comprehensive. So when we talk about this accounting standard, it's statement of cash flows when you are statement of changes in equity and notes to the account. Very key when we're talking about financial reporting. These contributes. So we have 20%. When I wrote here IAS, you can see most times. So you might be asking what's the meaning of IAS, what's the meaning of IFRS. On this area can come as a question. Basically, IAS is International Accounting Standard, while IFRS is International Financial Reporting Standard. Here. I know the next question that will come to your mind is what's the difference between IAS and IFRS? Single group, simple just groups. A little overview. This also contributes 20% far back in 1973. So here we'll be looking at the parent as a subsidiary of uniformity. Here we'll know who a parent is and who a subsidiary is. So what does that mean? Associate accounting means if you are practicing in one country, the statement of financial easier for you to practice in that country when there is uniformity in the accounting. In accounting, look at how to calculate goodwill. So about 10 member countries came together and like look at bring in interest, which is such that regarded as NCI. Here, so in Nigeria, reporting in Nigeria control 70% of it in UK. If you own, it came together to form a body ordinary share that will be charged 30% is issuing sets of accounting standard because of the class. The name of that body that was formed in 1973 was known as the International. Then the E analysis accounting standard interpretation of financial statements. So basically, this is all about financial accounting ratios or financial statement ratios. What's the role of the committee? Look at the ratio analysis committees to under ratio analysis. Look at profitability, liquidity, that will be globally adopted or accepted. Then here also when you consider trend analysis, those standards, remember the interpretation is also very key and limitations of the financial statement. So that was the core reason why the International Accounting Standard Committee. So the other part, which is established, this is relatively a new. So before the era of accounting standards, sustainability reporting, a lot of what we call GAP, which also contributes 10%. If it has so here. What is look at the ESG reporting, generally accepted accounting sustainability frameworks. Look at the IFRS 1. We have basically company and so this is really a new topic and it's 10%. That has been the local gap that we've been using in Nigeria before the adoption of IFRS. It's ethics. So current and technological developments in different gaps have been adopted in different countries. Ethics, current and technological development all of this so that reporting. This also easier 10% for comparability purpose. So here we look at ethical issues in financial reporting. So like I said, the IASC was formed in 1973. Technology on financial reporting like AI, data analytics, sets of accounting standard. Then current trends and development in financial. IAS means International Accounting Standard. Cumulatively, and they were able to issue that gives 1 to 41 IASs. Now, they issued 1 to 41 IASs. In the course of my review, remember I did mention that 10 member countries came together something about IASC, accounting standards. Remember this IAS, I think this might be relatively new IAS. However, financial reporting. I think the first standard that is accounting was 1975. Yes, 1975. When we are talking of financial reporting. There were limitations. Yes, it's very key of the board of this body, IASC. One of the criticisms of this body was that when I wrote here IAS 16, a body that was issuing accounting standard. IAS was the meaning of IFRS. Global or countries so basically, are adopting. IAS is International Accounting Standard, IFRS is International Financial Some of these member countries said the next question that will come to your mind is what's the difference between IAS and IFRS issuers? Just what happened that now led to various reforms far back in some of the other limitations of IAS issue of uniformity that led to a major reform accounting standard. It led to a major reform. What does that mean? I think some of the criticism means if you are practicing in one country is that it will be easier for you to practice in that country when there is many standards allowed multiple accounting options in accounting generally. You're knowing fully well that so about 10 member countries came together and like okay how do we bring uniformity in accounting? It's not just principle based. The reporting here in Nigeria, reporting in Nigeria reducing uniformity. So when there are multiple options, it can reduce uniformity. It came together to form a body that will be charged with responsibility of issuing sets of accounting standards or companies. The name of that body that was formed in 1973 was known as so moving on. There was a major reform that happened in 2001 that bettered IASC, International Accounting Standard Board. So in 2001 there was a major reform. So IASC was reformed to what we call the IASB, which is International Accounting Standard Board in 2001.
And what happened?
Whenever I prepare the
International
financial
Standard
statement, those
Board
the standard gives you
their own set of
guidance
accounting standards
on how to go about the preparation of
known
the financial
as the
statement.
IFRS.
So that was the core
International
reason why
Financial
the International
Reporting
Accounting Standard
Standard.
Committee was
So
established.
what they did, they issued their own set of accounting
before
standards
the era of
and now
accounting
adopted
standards, there
all
have
the
been a lot
IASs
of
that was
what we call
issued
gap.
by
Each
predecessor.
country they have their gap.
So what
Each
they
country
did,
has their
they
gap.
not only
What
issued
is
their
gap?
own
Gap
accounting
means
standard,
generally
also
accepted accounting
adopted
principles or
the
practices
IASs that were issued
like
by
in
the
Nigeria,
predecessors.
we
But
have the
where there are
Company and
conflicting
Allied
views
Matters
between the
Act,
IFRS and
CAMA.
IFRS
That has been
supersedes
the local gap that
So,
we've been using in Nigeria.
one
before
of the
adoption
challenges
of
that the
IFRS.
IASB so because of these
Try to solve
different
was
gaps
the
that have been
issue
adopted in
of
different countries.
representation.
IFRS brings uniformity.
Remember, the
of
criticism
all
of
of this,
IASC
so
was that it was not highly represented in
easier
member countries
for
So
comparability
the IASB
purpose,
in
as
the
the
bid
case
to
may
solve
be.
that issue.
So like I
created
said, the
a lot
IASC
of,
was formed in
boards
1973
within the
and what did they
IASB
do? I told you
to
it's
increase
issued sets of
representation
accounting
from
standard
member countries.
known as IAS.
So the IFRS
IAS means International
or
Accounting
the
Standard.
IFRS was issued by the
And they were
IASB
able to
is
issue
focused on producing
1
high
to
quality
41
principle-based standards
Yes, they issued
that
1
promote
to 41
transparency,
IASs.
accountability,
mentioned
and
that
efficiency
10
in
member
the
countries came
financial
together to develop
market.
IASC.
And currently,
And remember,
the
this
IASB has
IASC,
issued
they
1 to
issued
19
IAS.
IFRSs. However,
Although not all of them is
I think their
applicable.
first standard that they issued was in
For example,
1975.
IFRS 18
Yes,
in Nigeria will be
1975.
applicable globally, will be applicable
But
from
there were
2027.
limitations
But
of
they
the
are
board
early
of this body,
adopters.
IASC.
Because early adopters
One of
are
the
encouraged
criticism
as well.
of this body was that
So now we now understand
a
what
body that was
IFRS
issuing
and IAS
accounting
is.
standard.
So remember
that
IFRS is
global or
International
countries are
Financial
adopting
Reporting
standard, while
Some of the
IAS
criticism
was that
International
it was not
Accounting
highly
Standard.
represented.
Now, narrowing
Some of
this
these member
down to
countries
Nigeria,
said they
we had our
criticized the
own
body
standard
that
setting
a
body
lot of
in
countries
Nigeria.
were not highly represented.
In
as part of
1982,
the
a
standard
body known
issuers.
as the Nigerian Accounting
So what
Standard
happened? That
Board
led to
was
various
established,
reforms, coupled with some
issue
of
sets
the
of
other
accounting
limitations
standard
in Nigeria.
of
IAS.
So the
That led to a
NASB
major
issued
reform.
local standards
It led to a
known
major
as
reform.
SAS.
I think some of the criticism
SAS
on the
is
statement of
IAS that was
accounting
issued by the
standard.
IASC is that
They issued sets of
they
accounting
had
standard in
notable
Nigeria.
weaknesses. Many
Although
standards
in
allowed multiple
2011 there was
accounting
also a
options.
reform, knowing fully well
which
that
now bettered
the
the
Financial
UK gap,
Reporting
which is
Council
the
of
IASB and the
Nigeria, which is
IASC and the case may be,
FRCN.
is majorly principle based. So there
They
are multiple
are
options,
responsible for
options,
setting local
reducing
standards within
uniformity.
Nigeria.
So when there are multiple options,
So
and
basically,
uniformity.
what happens is
Enforcement
in
was
Nigeria
also
we
weak
adopt
because the
fully
IASC have no
IFRS.
legal authority
We
over
adopt
countries or
IFRS. So
companies.
whatever standard that is being issued by the IASB,
So moving on,
Nigeria
there was a major
is
reform
fully
that
compliant
happened
of
in 2001
IFRS.
that bettered
I think
the
globally,
International Accounting
IFRS
Standard
is in
Board.
over
So in 2001 there was a major reform.
Thereabouts.
So IASC was
So
reformed
why
to what we
is it
call the
necessary? Why do
IASB, which is
why
International
are
Accounting
countries
Standard Board
adopting
in
IFRS?
2001.
Major reason is
And what happened?
uniformity
International Accounting Standard
and
Board
easy for
issued their own set
comparability,
of
which has
accounting
been the
standards
issue faced in financial
known as
reporting.
IFRS.
Comparing the
IFRS,
performance of
International
one
Financial
company to
Reporting
another, especially
Standard.
when they are operating
So what
in
they did, they
different
issued their own
regions,
set of
can be
accounting
cumbersome.
standard.
So
And
the
now
accounting standard brings a
adopted all
benchmark,
the
a basis
IASs
for
that was
comparison.
issued by
Even if
its
a
predecessor.
company is operating
So what
within
they did,
another
they not
geographical
only issued
region,
their
it's
own
easy to
accounting
compare
standard,
because
also
of
adopted
IFRS.
the IASs that were
we are
issued
going
by
to be in the
predecessors,
subsequent
but
classes. We'll be looking
where
at
there are
all of these
conflicting
IASs
views
and
between
IFRS and IAS.
from
IFRS
the ones that are
supersedes.
applicable at this
So,
stage of the exam. We'll look at them
one of the
individually
challenges
and we'll
that
try
the
to break them
IASB
down for easy understanding.
Try
I
to
also try to
was
solve
the
questions
issue
relating
of
to that.
representation.
And also,
Remember,
apart from
the
these,
criticism
apart
of
from the
IASC was
standards,
that
like
it
I
was not highly
said, we're also
represented
going to
by
be looking
member
at group
countries.
accounts and the other
The IASB
part of the
in a bid
syllabus.
to solve
So
that
please
issue, created a
subscribe
lot of
and share the link so that others can
boards
join the classes
within the
completely.
IASB.
The name of the channel
to
is
increase
the Finance
representation
Docket.
from member
So our classes
countries.
are for now
So the
are majorly
IFRS
weekends,
or the
and
IFRS
I'll be
issued by
uploading
the
videos at
IASB
least every week
is
so that you
focused
can
on
watch
producing
even
high
if you are not able
quality
to join the live classes.
principle-based standards.
You can watch
that
the
promote
videos and
transparency,
if there are questions,
accountability,
you can ask
and
your questions
efficiency in the
as well on the chat
financial
box.
market. And
For
currently,
all the classes
the
we
IASB
have
has issued
I will send
1 to
materials so you can
19
drop your
IFRS,
emails where I can drop the
although
materials.
not
I'll send
all
the
of
materials
them
across
is
so
applicable.
that before the next class it's easier
For example,
you to go through
IFRS 18
the
in Nigeria
materials.
will be applicable
And also
globally.
please try to
will be
download the
applicable
path
from
finders
2027
because that will be our
We are
reference
early
point for solving
adopters,
questions.
because
So
early
we'll
adopters
solve
are
questions from the
encouraged as well.
pathfinder. So try to download the
So
pathfinders
now we now
so that we
understand
are solving
what
questions. It's
IFRS
easier
and
for
IAS
everyone
is.
to
So
tag along.
remember,
IFRS
please send this
International
link to others,
Financial
let them subscribe
Reporting
and
Standard,
click the
by
notification
IAS
button,
International Accounting
so that
Standard.
if I upload any
Now,
video, if any
narrowing
video
this
has been
down
uploaded
to
here, they'll get
Nigeria, we
notified.
had our
And
own standard
yes,
setting
so
body
thank
in
you very
Nigeria.
much.
In
Yeah, this is just an
1982, a
introductory
body
class.
known as the Nigerian
So our
Accounting
next
Standard
topic
Board
for
was
next class
established
is
to issue
conceptual
sets of
framework.
accounting standard in Nigeria.
We'll dive into
So
it
the
proper, so that
NASB
you have a
issued
bit of
local
understanding of what
standards
conceptual
known
framework
as
is
SAS.
and how it
SAS
affects
is Statement of
financial
Accounting
reporting.
Standards. They
Thank
issued
you,
sets of
everyone,
accounting standards
and
in
do have
Nigeria.
a lovely
Although in 2011 there was also
Thank
a
you.
reform which now bettered the Financial Reporting Council of Nigeria, which is FRCN. They are responsible for setting local standards within Nigeria. So basically, what happens is in Nigeria, we adopt fully IFRS. We adopt IFRS. So whatever standard that is being issued by the IASB, Nigeria is fully compliant of IFRS. I think globally, IFRS is in over 140 countries, thereabouts. So why is it necessary? Why are countries adopting IFRS? The major reason is it brings uniformity and easy for comparability, which has been the issue faced in financial reporting. Comparing the performance of one company to another, especially when they are operating in a different region, can be cumbersome. So the accounting standard brings a benchmark, a basis for comparison. Even if a company is operating within another geographical region, it's easy to compare because of IFRS. So we are going to be, in the subsequent classes, we'll be looking at all of these IASs and IFRSs from the ones that are applicable at this stage of the exam. We'll look at them individually and we'll try to break them down for easy understanding. I also try to solve questions relating to that. And also, apart from the standards, like I said, we're also going to be looking at group accounts and the other part of the syllabus. So please subscribe and share the link so that others can join. The class is completely free. The name of the channel is the Finance Docket. So our classes are, for now, are majorly weekends, and I'll be uploading videos at least every week so that you can watch. Even if you are not able to join the live classes, you can watch the videos, and if there are questions, you can ask your questions as well on the chat box. And for all the classes we'll be having, I will send materials, so you can drop your emails where I can drop the materials. I'll send the materials across so that before the next class, it's easier for you to go through the materials. And also, please try to download the Pathfinders, because that will be our reference point for solving questions. So we'll solve questions from the Pathfinder. So try to download the Pathfinders so that when we are solving questions, it's easier for everyone to tag along. So please send this link to others, let them subscribe and click the notification button so that if I upload any video, if any video is being uploaded here, they will get notified. And yes, so thank you very much. Yeah, this is just an introductory class. So our next topic for next class is conceptual framework. We'll dive into it proper so that you have a bit of understanding of what conceptual framework is and how it affects financial reporting. Thank you, everyone, and do have a lovely day. Thank you.